Hello, and welcome to this educational platform of Ghatana Chakra Book video. Our aim is to deliver knowledge to you in a simple, clear, and accessible manner. Let us begin this journey of learning and success.
All right, the economy just had its latest checkup, and we've got the results. Our guide for this is the central bank's brand new monetary policy statement, so let's treat it like the official medical chart.
Okay, let's get right to it. The one question on everyone's mind is super simple, right? Right now, is our economy actually sick, or is it healthy?
Well, the financial doctors over at the central bank have just wrapped up their examination, so let's pull up the chart and see what the official diagnosis is.
Okay, first things first. We gotta look at the doctor's orders. What's the main prescription the central bank has written for the economy?
Now, to understand that prescription, you need to know about something called the policy repo rate. It sounds complicated, but it's not. It's basically the interest rate the central bank charges other banks. And that influences the loan rates for all of us, for things like car loans or mortgages.
So what's the big decision? Well, the central bank is playing it cool, holding steady. The main policy rate? It's staying put at 5.5%.
And the rate for banks that want to park extra cash with them, that's also staying the same, at 5.25%. And finally, the emergency borrowing rate for banks isn't budging either. It's at 5.75%. So, the bottom line is, the entire system is kind of on pause.
So what in the world does this diagnosis mean? It's a really clear message. Steady as she goes. By not changing a single thing, the central bank is basically saying, you know what? We have confidence in the economy's current path. No new medicine needed, at least for now.
All right, so with the prescription set, let's check the domestic vital signs. Just like a doctor checks your temperature and your pulse, economists are laser-focused on two key things: inflation and growth.
And honestly, the news here is really, really good. On one side, you have inflation. Think of it as the economy's temperature. And it's cooling off nicely. It's actually dropped to its lowest point in over 8 years. Then, on the other side, you've got the economy's pulse, its growth rate. And that's projected to be a super solid 6.5%. So, if we're going to put it simply, the economy's temperature is down and its pulse is strong. I mean, you can't really ask for a better combination for a healthy diagnosis, right?
But of course, no economy exists in a vacuum. It's not in a bubble. So next up, let's take a look at the global scorecard to see how we're doing in relation to the rest of the world.
Whoa, okay, look at this number, just 0.6%. What is that? That's our current account deficit. And let me tell you, that is incredibly low. It basically means the gap between what our country earns from the world and what it spends is tiny. That's a huge sign of financial health. So, what's the secret sauce? What's the engine behind all this success? It's our services sector. I mean, look at this. India's share of global services exports has more than doubled since 2005. It's become a massive pillar of our economic stability. Now, it's not all perfect, of course. There is a challenge. And it's on the good side. Our trade deficit there has actually gotten a little wider. But, and this is a big but, the good news is our safety net is incredibly strong. Our foreign exchange reserves, they're massive, standing at nearly $700 billion. You can think of this as the nation's giant emergency savings account. It's big enough to handle any global shocks and cover more than 11 months of imports. That's a pretty comfortable cushion.
Okay, so we've looked at the prescription, we've checked the vitals, and we've glanced at the global scorecard. So let's get to the final diagnosis. The big question: what does all of this actually mean for you?
All right, here is your personal financial health report. First off, because interest rates are holding steady, your loan payments probably aren't going to change anytime soon. Good news, right? And with inflation low, your savings are much better protected from rising prices. Also, the nation's emergency fund is super strong, so we can handle global bumps in the road. And that booming services sector we talked about, well, that signals good things for future job stability. All in all, the diagnosis for your financial well-being is looking pretty healthy. And that's our checkup for today. The economy's vitals are stable, the diagnosis is good, but it leaves us with one final big question. What new symptoms, good or bad, will the next checkup reveal?